So, like I said, we're going to be going over a couple of trades today. I'm going to explain them to you in a bit more detail and what I think at this point. Right now, as things stand in the markets, I have reason to believe that the US dollar is going to lose significant strength versus most, if not all, major currency pairs. The US dollar for the last about 2 years has been very strong, especially versus the euro and other pairs, starting 2014. Somewhere right about here. It was strong right back over here in 2011 with a small retracement and then a very large drop starting 2014, right about quarter one, as soon as we started quarter one. So there are cycles in the market, and I'm going to explain to you what can happen with this scenario right here. We have a very sharp drop that lasted a few months, and I'm pretty sure you all remember this. I remembered it very well. I always wanted a strong dollar because we do receive commissions and payments from the banks we work with in dollars. So if the dollar is weak, we obviously work with Swiss francs and then euros, that means we're losing money. So when this happened, I was extremely happy. Right now, you can see a consolidation point over here of price being stagnated from early 2015 till right about now. You can also see very strong movement this month, and here it is. Just like this drop over here, I want you to pay attention to this one here. This is a very bullish candle. Like I said, I have reason to believe that the US dollar is going to become very weak this year, probably around the elections time, so somewhere around quarter 3 towards quarter 4, but we can even see this happen much sooner. I can't really predict exactly when it's going to happen, but it started. This is a very strong bullish candle, and if we finish the month this way and we break this white line over here, which is right about the 115 level, if we break this level, we can see significant gains, and we can target the 120 area most definitely. So we have a question from Abdul. No, Abdul, I don't mean the US dollar is strong. I'm saying that it will lose. It will basically Euro USD is going to go up. What I mean is I have reason to believe that the US dollar is going to be really weak this year. We saw it yesterday with Yellen. Yellen started speaking, and without even saying something significant, Euro USD, GBP USD, even USD JPY and other pairs shot up. For example, the trade I gave you a couple of days ago is this one, and you all received it, and this is the triangle pair that I sent out, and you can see a massive bullish candle right here. That means that the gains in this month on AUD USD is about 600 pips, and that's pretty strong. That's a very bullish candle. Obviously, things can change in the market, and I'm not telling you that this will happen right now. Like I said, I have reason to believe technically and fundamentally that the US dollar is going to lose a lot of strength. It's been very strong for the last couple of years, extremely strong, and I can name many reasons why the Fed and in general the US economy doesn't want a very strong dollar. Well, look at the AUD USD. We're going from 110 all the way to 1.70. This is massive. This is a massive difference in trades and everything else. That's 4,200 pips. Yes, you're right. Abdul is asking to make sure if the US dollar goes weak, then Euro USD should go up logically, right? You're not wrong. You're very correct. This doesn't mean much, but like I said, since about 2010, I've been expecting to see, and many other financial analysts have been expecting to see a very strong crash in the markets. For example, indices, index, and even stocks have been very bullish around the world. There is a ton of uncertainty in the markets. You can see that with gold, you can see that with oil, you can see that in currencies, rapid movements. But what I want you to pay attention to is the stagnation, basically the stop in price over here. This doesn't look like much, but I want you to pay attention that these are monthly candlesticks, and each one of them, from the first, that's 700 something pips, the next one is 800 something. They're all massive movements in the market, and they take each one takes a month to develop. And the stagnation on this happened right around here, which is well, 1 year ago, approximately 1 year ago, 1 year ago, and about 20, 30 days. So we can see a bullish candle, like I said here. We can see a triangle formation in pricing, a stagnation, basically shadows up, shadows down. There are reasons behind all of this, fundamental and technical. But right now, once I show you what I'm talking about, I want you to pay attention to the technical sides of the market. So Euro USD does not have enough strength to break basically the 105 area. Does not have strength. It's tested it over and over again on daily, weekly, and even monthly candles, and has not broken it yet. It hasn't broken the 115 area either. As you see the shadow here, the 117, when the Fed did not raise rates when everybody did expect it, and that was right about August. I remember that today very, very well, because most of our traders were trying to sell Euro USD at that day, and many people lost a lot of money. So this goes with saying that just like Warren Buffett's quotes and many other traders who have been very successful and investors, when the whole market, the media, and everyone's telling you that something's going to happen, believe me, you should expect something else. So if a recession kicks in and everything starts going wild, stocks start dropping like crazy, I want you to see that as a massive opportunity, most likely once in a lifetime opportunity. In 2008, with the housing market crash, millions of people lost their homes, investments, and a lot of other things. And a handful of people made billions of dollars of returns, hundreds of thousands, and hundreds of millions. The reason is they did the opposite of what the crowd did. The reason the market is the same is because the reason the markets work and they don't change that much is because of human emotions. They'll always be the same because human emotions remain the same. And money is created by us and used by us, and this is the reason. I want you also to pay attention to lower interest rates, negative interest rates, and the reason there are negative interest rates in the world, in many, many major economies, just like Japan and the Euro, the reason they lower the interest rates to negative is because savers are losers in that game. So even if you have $1 million in your account, month over month, year over year, you're losing money. What does that make you do? That makes you withdraw that money and spend it. So they want the economy to get boosted by lowering interest rates. That means that people don't want to save money, they want to spend money, and this is how the economy gets boosted. We've seen massive gains in employment in the US. And if you refer to the housing market in 2008 and way before that, it was very similar. It was just going up, 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 and then boom, one day crash. So I just want to prepare you for things like this right now. Today, that's what I want to do, because it will happen. If it doesn't happen tomorrow, it might happen in a week. It doesn't happen in a week, it can happen in a month, in a year, in 2 years, in 10 years, in 20 years. Doesn't matter, but it's going to happen. History says it. No problem, John. Hey, John, I'm really happy to see you here. I haven't seen you in a while. I haven't seen you in a while here, and I know you're busy. I'm really happy to see you. Welcome back. So, like I'm saying, there is a lot of reasons why the US dollar can lose a lot in the next couple of months. And I'm going to show you this with different pairs. So we moved from the Euro USD, and I'm going to come back to it in a bit. I went to the Euro GBP USD. I want to show you this specific pair. And I want you to pay attention to the box. It has not broken this level. It's tried 1, 2, 3, 4, 5. We're at the fifth time right now. Regardless of what happens, whether it breaks or doesn't break, you're going to see either massive drops or massive gains. We need to be ready for this. How do we get ready for this? We need to teach you, well, many things, but one of the most important things that you guys need to have is risk management. When you open a trade, like I said yesterday, you need to be ready. You need to be ready to either take the loss or well, make the most out of your profits by compounding it once it starts going. We'll talk about that tomorrow because nothing's going to happen tomorrow. Yeah, there will be movement, but nothing major because everybody's going to wait for the NFP. It's going to be an important one, and like I said yesterday, it's going to be a dangerous one. So I want you all to be extra careful with your trades. If you can open smaller positions, and you can, please do so. Don't go crazy. So the first thing is this: stagnation of price, not enough momentum to break. There is a chance that Euro USD will start falling downwards. Right about till somewhere in between these yellow lines. We'll reach the bottom of this trend line. Let's just move this out, and as you can see, this is just about 3 months from now. So like I said, somewhere towards the beginning of quarter 3 and towards the end of between the beginning of quarter 3 and throughout quarter 4 and way beyond in 2017. There will be massive movements. Price has been relaxing for a long time, and as you see, it doesn't relax for that long. Over here, massive gains. Over here, rest. Over here, this is massive up and downs. Here. You can see it all over Euro USD. You don't see it go straight for months on end, and very rarely will you see something like this. So I'm telling you right now, there will be massive movement on the US dollar. And if the dollar moves heavily, that makes the whole market go wild. From stocks to metals to commodities to forex. So here's one reason. Here's the second reason. I'm just gonna go to a US dollar pair over here, and I want to show you USD CAD for the time being. And I called this out a few weeks ago, and I told you with this candle over here, this massive shooting star, that price would head down. So as you see, it looks like, look at these, I just want you to look at the past. It's made shadows continuously right before dropping, and there is a very big shadow over here. This is a massive shooting star, and we can definitely see price head much lower. I want you to pay attention to USD JPY now, and you will realize that long-term setups indicate that we are about to go against the US dollar. This is a very long trend line, and you can see the massive drop over here, and I'm pretty sure we can continue dropping down to the 100 area, even though the Japanese probably don't want that much, but every pair I showed you so far is indicating that it's about to turn technically versus the USD. And if we look at this as an ABC level, elite waves, A, B, C, we go up. So these are 4 major pairs I showed you so far, and I'm going to show you another one. Even though this is pretty low right now, it's on parity and even below it, USD Swiss franc, I think that we can go down to the 75 level here as well once the Euro USD breaks. Well, basically about the 80 area, which is what, 2,000 pips away? Yeah, well, 1.7, something like this. Technically speaking, you can see many setups versus the US dollar, and I've showed you on Euro USD, GBP USD, USD CAD, USD JPY, AUD USD. There is nothing significant here, and I pretty much don't trade the Swiss franc that much because it's very different from other pairs. But again, if I do the trend line over here, you can see that it's pretty much hit it. 1, 2, 3, 4, and we're going down. And I'm sure we can do this with many other pairs that are against the USD. such as New Zealand USD. Let's see that. I don't think that there's much there, but anyway, even that has gained massively in the last couple of days versus the dollar. Again, another trend line. So, what are your guys' thoughts? What do you guys think? Anything on your mind about this, what I'm showing you? Actually, I wanted to show you this for some time now. I've actually been waiting for something like this for a very long time, and these kind of opportunities don't come around so much. That's the reason we put the booster out there as well, and I'm going to explain this to you throughout these sessions that are going to last till Friday, so you guys can understand even better how you can take advantage of this. So the next 3 days are going to be essential towards these kind of opportunities. The market is showing us that there is a massive move coming, and when I mean massive, I mean, I was just about to swear just to get my point across, but I'm going to do that anyway. A massive fucking move. And I'm sorry for swearing, it's just to get my point across that this is really important. But the reason it's important is for you not to go wild at it. David is asking if euro rises, won't gold rise too? Yes, gold will rise too. Gold is a safe haven, and when the US dollar gets battered, that's when gold gets going up. And we can see, look, there are many reasons. There are many reasons to get ready for this. And do any of you see an opportunity in this? Very good. Timing. Peter, once again, with a very wise comment. Timing is essential. Very important. And that's the reason I decided to take out lots of time from my week. And by the way, next week I'm going to be taking a break. I'm going to be traveling. But it's not really a break. It's a break to get prepared for this. And I'm going to hold sessions every single day throughout next week till from Monday towards Friday. So the only day next week I'm not going to hold a session is on Friday. So Monday to Thursday. Do you guys have any ideas, thoughts, questions, concerns about this? Technically speaking, using technical analysis, I'm talking about very big stuff happening. These are monthly charts, and they're all lining up for something great. They're all telling us, technically, that the dollar is going to crash. But one of our rules states that we need to be just as ready to go long just as we are to go short. So we need to be ready for both scenarios, for a crash in the dollar and also for a rise in the dollar. Both of these scenarios need to be defined and prepared clearly in our heads. It has to be clear in our minds that we are ready to buy and sell, not just sell. Because if we just keep thinking it's going to go down, one day we're going to lose money. Okay, we're going to protect ourselves with stop losses. Please use stop losses. There's no way that I can explain to you in any kind of physical or logical or sentimental way how important it is to use stop losses. It's the difference between finishing the year with 100% gain and 100% loss. So John is asking what time frame should we be looking at. Once we identify, in yesterday's session I explained a little bit about this. Once we identify something important on the monthly charts or the yearly charts, we don't have yearly charts here on Forex, but on stocks you do. Once we identify something like this, it's best to go down to the daily and weekly charts, preferably daily on Forex. And I want to show you this. Yes, Peter, you're very correct, my friend. I'm really happy that you're here with us. You have a lot of knowledge. So you see, the daily one will show you much more information. Well, the monthly one will show you the most information, but the daily one will show you much quicker than the monthly a reversal or a break or basically movement. A 15 minute, a 5 minute, a half an hour will not show you nothing, nothing big, and you'll get out of it far too quick, and you'll miss something magical. Simon, you mean about going long and short to have the same idea to be ready for both? Okay. Um, Basically, look, this is what I want to show you right now. This is a trend line over here. It's a very strong one and has been holding on for many months and even years, especially the white one over here. Once price comes over here, the last thing we want to do is buy or sell. And the best thing we want to do is wait for something important to happen. If you are really in a rush and you don't have much time and you think that you will miss something, I recommend opening about 50% less than you normally would, a position size. So if you were to open a lot, I recommend the maximum of half a lot in order to increase your stop loss by double. Because many times you will see price head up. So imagine you went sell over here, price would go up, and then I think it was like the next day. Well, it is the next day, and I'm going to show you this. So price went hugely up, bullish candles. Many people bought over here, and then the next day just crashed. So what I mean by this is you need to have very decent stop losses at this. You need to do something very good with yourself, and the equity booster is excellent for this because it will allow you to continue trading on other pairs and even on these ones on shorter time frames and shorter goals. I'm talking about gaining a minimum of 500 pips on something like this. So Lisa is asking about the shooting star if it's on the Euro USD. I'm going to show you right now. We could, the biggest shooting star we have is here on USD CAD. We do have one on USD, GBP USD, but that's a very shorter time frame. And here it is. We're having hulls, and we said to short this recently and short this recently. So Euro USD and GBP USD. These are short-term trades. I'm talking about 100 pips, 200 pips, something like this, maybe more. But the biggest one that we have is USD CAD. Here it is, monthly chart. These we don't find very often. We find once every year, sometimes 2 years. So in any case, what I'm trying to tell you guys here is that technically speaking, technical analysis is indicating that there's going to be a long term, not short term. This is short term. We have many reasons to short GBP USD. We have a head and shoulders. We have a neckline. We even have a shooting star over here. We have a trend line. In the other picture that I sent you all, you clearly see the 4 points of why we're shorting this pair right now. So this is short term. I'm talking about long term. I'm talking about months. But it's in those. So look, let me explain to you the difference between a trader and an investor. An investor is somebody who buys or sells for long-term gains, 3-digit, 4-digit pips. A trader is somebody who identifies patterns on shorter time frames, 4 hours, 12 hours, daily, weekly. An investor is somebody who looks for long-term trades. Now, the reason when I send you emails, I write trader investor is because I want to make you both. I want to teach you how to be both. I want to teach you how you can make money on shorter time frames, and I'm not talking about 15 minutes and 20 minutes. I'm talking about the shortest of 4 hours, and an average of 1 hour, and an average of 1 day. And then I want to teach you at the same time to find these kind of moves. Do you know how many people are in this industry and are not noticing this right now? Or the big drop over here at the at the 40 level, 140, or the shooting star on USD CAD. There are many people who are not noticing this, and there's even more people who don't know how to trade this. And this is why I'm here. I'm here to teach you how to trade it. But like I said, I'm going to make the session a bit shorter. Today, I'm just going to give you ideas of long-term trades to teach you how to be investors. Tomorrow, I'm going to teach you how to actually enter these trades and how to use proper risk management. Friday, I'm just going to give you a couple of trades, shorter term, daily time frames, so a couple of days, and a couple of other things. I'm always looking for new things to teach you and other things that are in my mind and they're locked away somewhere and I just need to find them. So do any of you have any questions for me? Okay, so we have two questions. Marius, you're very right. Marius says that when to enter a trade is the really hard one. You're very correct, and I'm going to try and teach you as best as I can how to do this, but that won't happen today. Today I'm just opening your eyes up to a very big picture. Well, Peter, there's another one coming. In regards to your report, there's another one coming. There have been many trades closed this week and last week, and that distribution will happen right about Friday towards Sunday. So you'll receive that as well. Simon asks, how would you start to study the charts? Well, I'm going to explain to you the question as best as I can like this. I would start at the longest time frame, and that's the first thing I do every morning is go on site my computer and open up monthly charts. That's the first thing I would do. But before that, there is a lot of work to be done, like I explained yesterday, and that's to look at the charts all the way back and understand and learn each and every pair. What I would advise you to do is start with Euro USD, clearly understand where historical points are of interest, why they happened. So for example, learn why this happened. This drop over here, this is a very aggressive drop, but then there's very aggressive gains. And the time period is medium towards long term. So I would advise you to learn the pair first, and I would not advise you to go crazy and learn 10 different pairs. I would advise you to learn one pair at a time, starting with Euro USD, GBP USD, or USD JPY, depending on what makes you most. Basically, go to the one that makes you least excited, because the ones that make you the most excited, you will have too much emotion involved in it. And to answer the question again, start at the monthly charts every single morning, look at them, but to really look at them. Ask yourself, what am I looking at right now? What do I see? Do I see an opportunity? Ask yourself questions. There's lots connected to this, and it's a really tough thing to do. But like I told you, it's really worth it. And you really don't need 24 hours a day to do something with this. You just need a couple of precious minutes where you're fully connected towards the chart. You need many hours of studying it and understanding different pairs and how they work and how different economic data affects these pairs. You need to understand what's happening on a monthly basis in regards to fundamentals. For example, there's lots of terrorist threats in the world right now, and that can really move the market. So you need to be aware of these things because that's sentimental stuff. Forget about technical and fundamental analysis. You know, when there is a bombing in New York or anywhere else around the world, things get pretty wild and nobody cares about anything. That's called opportunity. And they're always around. I also explained to you yesterday, I'm going to answer everyone's questions in a second. I'm just going to explain to you again about normal and abnormal movement in the market. Normal movement in the market is when price comes around these areas, touches, bounces back down, touches, bounces back down. I explained to you abnormal movement is when price breaks those levels with rapid pace and nobody expects these things to happen. That's abnormal. And these things don't happen all the time, but they happen, and we have to be ready for them. Last year, just about a month ago from now, last year, the Swiss franc went mental. Brokers closed down. People lost a ton of money. Some people made a lot of money. That's abnormal movement because once it happened, it would trace back right where it was. So that's, again, this takes a long time to learn, and I need you guys to be patient, and I need you guys to understand that patience is really one of the most important things to have in this market, right, with risk management and other rules that I gave you. But there's a very famous quote that states that, and Warren Buffett said this, that the market is designed to move money from the impatient person to the patient person. So if you want to move money to your pockets, to yourself, start becoming patient. Learn how to be patient. You don't have to open 10 trades a day. You can open one a week and make more money than you did all month working for somebody else or for yourself. Do you guys understand what I'm saying? Very good. Thank you. Okay, so I'm going to answer the other questions right now. The next one is Lisa. Just a second, just my chat keeps moving. Well, Lisa, I know you are. You've been here since day one. You've always been here, and I'm really, really happy that you come so much, just like almost everybody else. Well, John, look, I'm going to tell you like this. Most people make a lot of mistakes. I mean, I make mistakes on a weekly basis in regards to my personal life and towards my business and towards my trading. But the best definition of I heard of mistakes is that you make a mistake once, okay, it's a mistake. Twice, it's a mistake. 3 times, it's a mistake. The 4th, 5th, 6th, 10th, 20, 30 times, it's a choice. So basically what we need to do is change around our choices, because it's not a mistake anymore if we keep doing it. And I know patience is really, really hard to get around with, but the best way to remove excitement and improve patience is to have a little checklist. Once you log into your platform, or even before you log into your platform, have a checklist. That checklist doesn't have to have 10 things on it. And I don't advise it to have many things on it. I advise you to have about 2, 3, 4, maximum 5 things. For example, point number 1, don't open a trade until you have definite entries to open a trade and definite reasons. Point number 2, open the monthly chart, review it, see where the market is going, what's happening. Point number 3, look at the economic calendars. What's happening today? What happened yesterday? What's happening tomorrow? Point number 4, review shorter time frames. Point number 5, get ready to find a trade. If you don't find something good, switch off your platform, start reading a book, watch a video, talk to us, spend time with your family, go for a run, go make some nice shake, I don't know, do something. Do something productive. Like I said, the way to become successful in this industry is to better yourself, and better yourself every single day. Every time you lose money, it's an opportunity for you to learn something out of it. Every time you're impatient, it's an opportunity for you to learn to become patient and to get even more excited of becoming patient. And there's one thing I recommend you all to do, and that's to learn NLP, Neuro-Linguistic Programming. That's something that can really enhance you as a person in regards to your personal life, business, and trading. Especially trading, well, especially everything. It's actually really good, and I can even recommend you a couple of books if you guys are interested. It's about pretty much controlling your mind, how to control yourself, how to better yourself, and how to be, well, the best person you can be. But John, don't worry about it. Patience is something that even I still have problems with, and most other traders. But the way we manage to control patience is by setting certain rules and really following them, taking them to heart. These rules need to be a part of you just as much as your name is. You know, just as much as Lisa's name is Lisa, that's how much these rules need to be a part of you. My thoughts on subliminal messages, Lisa, are well, really big. I believe that they work, and I believe you can program yourself this way, and I do believe that everything is connected in the universe. I definitely believe this, and this is my personal opinion. Well, I'm going to send you guys a couple of things on regards to NLP, and that's gonna definitely help you. There's very simple practices that can take you a long way, and I'm talking about dealing with personal challenges, increasing your productivity in your business or in your workplace, becoming better at trading, controlling yourself better. These are all parts. Do you remember, guys, when I told you that trading and investing is 80% mindset? So if it's 80% mindset, even if it's 10% mindset, I believe it's 80, but if it's 10% mindset, isn't that 10% essential? Yeah, it is 80. I did say 80, but I'm just saying even if it's 10, it's still essential because 10% is a big number. Imagine 10% of your life. That's just about 10 years. That's huge. So I've given you these ideas over here, and I left it all in the long term. And it's again really important for you guys to review these kind of patterns because there are chances of this breaking, even on Friday. There are very good chances of this breaking, and we can see if it breaks with the NFP, we can see price head towards 114, 114,500, or even the 115 level, and that's a very important level that we need to pay attention to. But if price breaks this level, it does not mean that we have to put maximum risk. In order for you to risk something bigger, you need to earn the right to be risky. And how do you earn the right to be risky? You earn it by making money, by acquiring risk appetite. Once you do that, I give you full advice and support to risk higher. But if you do not make money, don't risk your actual funds. You worked far too hard for that money. And even if you didn't work hard, you would be foolish to risk it on a simple trade idea. Because at the end of the day, they're just ideas, which can make you a lot of money or lose you a lot of money. So first things first, we don't want to lose a lot of money. Capital protection is the rule, the most important rule, and that's why it's rule number 1. You guys follow me? Very good. Very, very good. Okay, so I'm going to have to call this a day. I've given you the trades. I have to go into a meeting pretty soon. But before I go, do you have any questions for me? Please, there are no silly questions. There's questions, especially quality questions, will create you into a quality trader. So shoot. If you have anything, shoot right now. If not, tomorrow I'm going to be explaining even more things. And I'm actually still working on a very nice video for all of you that's going to help you a lot. So Marius is saying, so we should not enter anything right now. Yes, I would not advise you to go into any long-term setups yet. You could take a chance with the short-term setups, but tomorrow is Thursday and I do not see much happening in the markets tomorrow because the market will be waiting for the NFP. We can see dollar lose some value tomorrow, but then the NFP is going to be really important, and I really wouldn't recommend you guys risking too much. John, please email me directly if you have any questions, and all of you can email me right here. If you do have any questions, I'll be more than happy to answer them. So yes, John, please do ask me as many as you want. Peter, you really put a smile on my face. You're really great, and I'm really happy to have you here. Lisa, thank you sincerely. Thank you for the compliments. You can find all the sessions right on if you search eloquence training right on YouTube, and you'll find the channel. So I've just sent you all that. If you search that, you will find it there. Just search for the latest video, and it's going to be right there. Thank you, Craig. What is your trade? Is it a buy? Tavi, yes, the lawyers are setting up the new agreement for you. I do not have it on my computer because I can't find it, and I've checked my mail, so I can't find the correct agreement, but you will receive it You'll receive it by tomorrow. And I'm sorry for the delay. Kato, I'm so happy to have you here. And if you're able to have a quick call tomorrow, please message me in Skype. And there's a couple of things that I'd like to talk to you about. Something really interesting that I promised I'd talk to you about soon. Sell. No, Craig. I think you should leave your position on for a little bit. Just have your stop loss in, and don't risk too much. John, thank you. Pavi, thank you. Kato, thank you. Thank you, Lisa. Rick, I'm really happy to have you here again. Guys, thank you so much. You're all amazing. Good night to you, Marios. So I'm going to end the session now. The recording will be uploaded by tomorrow. Thank you all for coming, and I wish you all the best. Have an excellent day.